Ladies and gentlemen, good day and welcome to the Q2 and H1 FY26 earnings conference call of Eris Lifesciences Limited. Today, we have with us on the call Mr. Amit Bakshi, Chairman and Managing Director, Mr. V. Krishna Kumar, Chief Operating Officer and Executive Director, Mr. Sachin Shah, Chief Financial Officer, and Ms. Kruti Raval, VP, M&A and Investor Relations. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Please note, this call is being recorded. I would now like to hand over the conference to Mr. V. Krishna Kumar, Chief Operating Officer and Executive Director of the company. Thank you, and over to you, sir.
Good afternoon, everybody. Welcome to our Q2 investor presentation. We'll structure it in three parts. We'll first talk about the domestic branded formulations business. So business highlights for the quarter. We saw a revenue growth of 10% year on year, which is a 30% over IPM growth of 7.7%. H1 growth of 11%, which is a 42% over IPM growth. The couple of key misses in delivering 50% growth over market. One was a delay in G Saxenda approval, which resulted in our decision to cancel the product. And we also took a delayed price increase in H1, which kind of gives us a tailwind for H2 because the full impact of the price increases will come in, and the RHI cart opportunity, which we expect to see starting December. In terms of EBITDA, we saw 11% growth in Q2 and a 13% growth in H1 with margin expansion all across. Q2 also saw an EBITDA hit of 5 odd crores on the account of generics. Continued good news on the Biocon front, Q2 margin of 32%, up from 30% in Q1 and 19% at acquisition. And in-house manufacturing will lead to further expansion. In terms of key numbers, revenue 708 for the quarter, 1,410 crores for the first half. EBITDA 266 for the quarter, 527 crores for the first half. And basis H1 run rate, we have a visibility of 12% revenue growth for this year, which will be 50% over the expected market growth. And we expect EBITDA growth to be in the range of 15%. And any upside from the RHI cartridges opportunity in the second half will be over and above these numbers. Reinforcing the story. So we are well positioned for success in this market. So we are talking about this in two parts, size of the opportunity and our capability to leverage the opportunity. So we've outlined the various segments of the market. It's a 3,700 crore market, which has traditionally been dominated by the innovators and now opening up for Indian companies. And in terms of our capability to leverage the opportunity, our vial production is already operational and stable. So we went live in August and we produced 2 million vials since then. And post-commissioning of cart manufacturing, we would be one of the very few players, probably the only one, fully interchangeable products as well as domestic backward integration. And we see the RHI vial business as something that offers the potential for quick scalability because there is significant inpatient usage in institutional setups for shorter durations. So this gives us a better ability to switch from competition. And as far as Glargine is concerned, given the interchangeability creds and the current growth momentum, we will double our market share in the next few years. We are also adding Aspart to the Biocon insulin partnership, talking more about that. So we are expanding this partnership on three fronts. One is we are adding Aspart to the scope of the collaboration. This was recently approved by the US FDA as the first and only interchangeable biosimilar. Secondly, Biocon is assigning select ROW markets to Eris for direct marketing of RHI, Glargine and Aspart by leveraging the global distribution of Swiss parenterals. And thirdly, Biocon seeks to expand its own ROW footprint in select markets by leveraging the insulin capacity at our Bhopal facility, which we had acquired in November last year and upgraded at a capex of 80 crores. So with these developments, the installed insulin capacity at Bhopal will be fully utilized. So we've green-lighted a project to double the insulin capacity, both in vials and carts. The expected capex is 150 crores, and we see an EBITDA potential of at least 50 crores per annum from this opportunity. GLP continues to be an exciting market opportunity, so it's kind of good to see our early hypothesis being validated now of a large and fast emerging GLP market. There are close to 100,000 active users today, and once the cheaper generic alternatives come available, we see exponential growth in the segment. We are highly optimistic about the market opportunity as well as our ability to leverage this opportunity. All the key work streams are on track. Our insulin market share has grown from 10 to 15% in the last 18 months. And we are confident that as a dominant insulin company, we have a logical plan.
So I'm very sorry to interrupt you, sir. Your voice is a bit muffled, sir.
Is it clear now? Hello?
Yes, sir, it's better now, sir.
Is it clear now?
No, sir, it's still going on and off, sir.
Okay, I'm bringing the speaker. I hope it helps. Is it better?
Now it's better, sir.
Okay, thanks. Our diversity product pipeline remains on track, both on the insulin analogs front and on the semaglutide, synthetic and recom. Everything is on track, as previously articulated. Moving on to the international business, I just wanted to quickly revisit, why did we get into such? What did we find attractive about the business? So there were 4 key value drivers that we saw. It was a pure injectables business with very strong regulatory regulation. It had the widest range of dosage forms in steroids and a very large dossier bank. And I think most importantly, Swiss was the only ROW-focused Indian pharma company with this kind of margins and not to mention the strong reputation for quality. It was a predominantly tender business, but well diversified across more than 80 markets. I think most importantly for us, we saw this as a viable platform for moving up the pyramid into international markets, which we've spoken to before. So in the last 18 months, we have been taking focused action to expand capabilities on the technology front, on the manufacturing front, and on the go-to-market side. So on the tech side, we onboarded pharma, we expanded the R&D team. And most importantly, we developed centers of excellence in key segments because this is something that every company aspires to be known for, certain products or certain technologies. So these are emerging COEs for us. On the manufacturing side, we reinforced the regulatory approvals, got the Brazilian approval for the first time, and now Swiss is among the very few companies who strengthen the quality. On the go-to-market side, our efforts were focused on expanding momentum and outreach in other markets. So Europe, Canada, and South Africa, we went gung-ho across all of these markets. We see significant impact and revenue visibility from these actions because we received our first purchase order from a European client on an injectable CDMO project. Happy to share that Swiss will exclusively manufacture for the innovator brand of the product. And the first leg of this project covers only 6 countries in Europe. And based on this, we have a revenue visibility of rupees 125 to 150 crores in the next financial year, with EBITDA margins similar to the business average. And we have discussions underway to expand the scope to 17 countries. In addition, we have discussions underway with a handful of marquee companies in some of our COEs, both for the innovator brand and loss of exclusivity opportunities, which would imply that we will be among the earliest units to the market. And the total book of business in EU CDMO has expanded significantly, which we'll talk about. But we've been talking to you for a while that this business will see significant inflection starting FY27. So happy to share that we have the visibility now. In terms of overall business transformation, the EU CDMO book stood at 100 crores at the end of Q1, and now we are at 700 to 800 crores at the end of Q2. In terms of what it does to the quality of the business and the stickiness of the revenue, in FY27, we expect that the percentage of revenue from reg markets will be close to 30%, up from practically nothing at start. The private market component of the business will go up to 50% is what we expect, starting with 30% now. And starting from a business which was only doing 100% generics, now we will start to have a reasonable exposure in the RLDPs also. As previously updated, we shifted a unit 3 expansion at a capex of 130 crores, general injectables all across, and we are targeting commercial production from financial year 28. In terms of financial highlights, we clocked 83 crores of revenue in the international piece in Q2 and 152 crores in H1. We saw a shortfall in Q1 and Q2 compared to last year because there is dry powder capacity which is being occupied for validation batches of the EU CDMO projects. Notwithstanding that, H2 is heavier for this compared to H1, and we have good visibility on delivering our revenue guidance. The Ahmedabad unit, which got Anvisa approval for one block in August, is again planning to host the Anvisa team in January for the remainder of the facility. Moving on to the consolidated business. Consolidated revenue for the quarter was 792 crores and for the half year was 1,565 crores. EBITDA for the quarter was 288 and EBITDA for the first half was 565 crores. EPS acceleration continues as guided. So Q2 PAT 134 crores, up 39%, and H1 PAT of 260 crores with a growth of 40%. Net debt stood at 2,278 crores at the end of quarter 2. So just putting all of this together, there are lucrative market opportunities which are driving the front loading of capex plans. So we had guided you to a capex of 750 to 800 crores over a 3-year period. There is no change in this guidance. There is a change in the timing because there is a Bhopal phase 2 expansion of 150 crores. There is a unit 3 for Swiss, which is at 130 crores. And our Diabesity pipeline and DS manufacturing at Levim also requires a second round of investment. So we see the capex outlay over the next 3 quarters to be at around 380 to 400 crores. Consequently, the debt to EBITDA guidance that we had given gets pushed out slightly. So just to recap, in the last 18 months, the net debt to EBITDA ratio is reduced from 4x to 2x. And without any change in our total capex guidance, now we expect to get to the net debt to EBITDA ratio of less than 1.5x by December 2026. Highlights of the consolidated financials. We had a capex of 50 crores in Q2, largely towards insulin and general injectables, bringing up H1 capex to 117. We had a book tax rate of 22% in Q2. OCF to EBITDA ratio stood at 47% in Q2. It was predominantly because of an increase in GST receivables, which took about 25% points. EPS for the quarter stood at 10 rupees and cash EPS at 13 rupees. This brings us to the end of the presentation and we can open up for Q&A.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask questions may do so by clicking the raise hand icon on the bottom of your screen and wait for your turn to speak. When prompted, you can accept the prompt on your screen, unmute your audio, introduce the firm you represent, and ask your questions. We'll wait for a moment while the question queue assembles. Participants who wish to ask questions may do so by clicking the raise hand icon on the bottom of your screen and wait for your turn to speak. We'll wait for a moment while the question queue assembles. We have the first question from the line of Devang Shah. I request you to accept the prompt on your screen, unmute your audio, introduce the firm you represent, and ask your questions.
Shah. My firm name is DD Enterprise. I have only one question to the management regarding what are the key triggers to look into the company for next 3-4 quarters? Like it's going to come from the Biocon JV what we did, or it's from the semaglutide, or from which product line, or from which of the things we can consider like the next 3-4 quarters can be looked at.
So clearly, so Devang, we divide this into into three things. So the DBF is the largest business as of now, and also has the largest opportunity within DBF, insulins and GLP. GLP will start hopefully from by the end of this fiscal year, and insulins we are seeing traction because of the withdrawal of the innovator. So clearly, insulins and GLPs in the DBF, when I'm talking about the front runners.
Okay.
And the second trigger is going to come from the plant, which is the biotech plant. So two ways trigger. One is decreasing the cost of our production substantially. So you saw that Biocon now is at 32%. Within this Biocon, insulin would be significantly higher. And when it goes and sits inside the manufacturing, our own manufacturing unit, we see a very substantial reduction there. So that is number. The international business which you see is in a point of inflection. Now we have a good visibility of the next year, which we have kind of articulated. The rest 700-800 crore books which we are talking is over a period of time, say over the next 3 to 4 years. So as and when it comes together, so these are typical 3-4 opportunities which we look at.
Okay. So now, there would be no raising of the debt would be there in next 2-3 years, like by acquisitions or something like. Is there any plan to do some acquisition also?
No, we don't have a plan as such. But look, we will. What I can tell you, we will be mindful about the debt to EBITDA ratio. So, having said that, we don't have any plan as of now. But if there is an opportunity, which is a good opportunity, but also doesn't really take us from our EBITDA debt ratio, then we might.
Okay.
But if you're asking me a straight question today, the answer is no.
Okay, that's fine. That's all from my side. That's fine. Thank you.
Thank you. The next question comes from the line of Harith Ahmed. I request you to accept the prompt on your screen, unmute your audio, introduce the firm you represent, and ask your question.
Hi, good evening. Thanks for the opportunity. So my first question is on the insulin aspart product, which you mentioned is a targeted launch for the second half of FY26. So trying to understand the status of this product from a regulatory standpoint. Has it been filed? When are we expecting the approval? And is this an exclusive arrangement that Biocon will have with Eris for the Indian market?
Yeah. So hi, Harith. The second question is an easy one. First, it's an exclusive arrangement. The work has just started, so we have filed it. But it is not the change. So as per the guidelines, this should move fast, which gives us the kind of visibility on the second half of this year. But Harith, regulatory things are clear. So I would not like to put a finger on that, but that's where we stand.
Okay. And the cartridge capacity expansion at Bhopal, what is the status there, and what are the timelines that we're looking at now?
You're asking all the questions. So good thing is that the trials started. We just told you in the slides that we already have 20 million. We have not pushed it into market yet because we are going through the stability once again. So vials have started. My first round of cartridge now shifts to say April, May next year, right? But there could be something here and there. So right now the visibility is more like April, May. The first line, the new line will be for vials. The new line of vials we have a FAT of July. So think about September, October next year. The cart will go to FY20, which is 27, first quarter or somewhere in that zone.
And how does this impact? There's a bit of a delay there. How does this impact our preparedness to capture this opportunity when Novo's exit becomes?
That is something secured already from a production point of view, because I misanticipated this, thinking that it should be more like August, and it is now in this month of November that we are starting to see the real thing happening on the ground. So the disadvantage is it got shifted. My estimate got wrong. The advantage is we were able to put a lot of stocks till that point, which we kind of highlighted in the last call also, that we are gearing up for more stocks. So we are whatever we are expecting out of that market to be captured, of our own numbers month-wise, that comfort we have till this point of time. If our capacity starts in April, May, then it will be further reduced.
Okay. The last one, this 100 crore investment in Levim. So, what will be our stake in this entity after this additional investment? Will it become a entity that's controlled by Eris?
Harit, shall we talk about this next time, please?
All right.
We don't have any clarity at this point. Yeah, right now we are 49%, but how does it work is something we'll tell.
Sure, Amit. Thanks for taking my question.
Okay.
Thank you. The next question comes from the line of Umesh Ladda. I request you to accept the prompt on your screen, unmute your audio, introduce the firm you represent, and ask your questions.
Hello, am I audible?
Yes.
Yeah, hi, thank you for the opportunity. So, sir, I just wanted to know in our domestic branded business, what is our base business growth, excluding the Biocon insulin products? And also, if you could just, bifurcate the growth in volume, price, and maybe new launches.
Okay, so I'll do the second one. The first one we will not do because now we are completely integrated. So the second piece is we had a very small this price revision in the first half. We missed the price revision kind of thing, and generally it is heavier in the second half. So we are expecting a large part of price revision to happen in the second half. And as per the volume growth, what is the number? AVAX number say? 2.1%.
Sorry, it's 2.1, right? If
Yes.
I heard it. Okay, and the rest 5% is majorly because of new launches, or how should I look at it?
So you look at it, it's more like 2.5% from price and rest from the new launches.
Okay, and also, so are we having a few products in the pipeline for the domestic branded business to be launched in second half, like excluding the insulin ones?
Yeah, we have a couple of big products. So those are due in launch, and I think in the third quarter or early fourth quarter.
Okay, got it, sir. And also, sir, coming to our insulin opportunity, like Novo is exiting, so do we have enough supply? Sorry, I missed that part. So do we have enough supplies promised from Biocon to suffice this demand?
Yeah. So boss, we have looked at the number, we have done our own numbers, right? Depending upon our current market share and estimated market share which we might get. And when we do that numbers, we are good for the year. And as I explained in the last call, that this delay, I had kind of estimated this to happen a little early in this year. So it's kind of a little delayed, but it gives us the opportunity to build up the inventory. So right now, the numbers which we have for ourselves, the target number, for that number, our stocks are sufficient.
Got it, sir. And so just a last one on the EBITDA guidance. So it's at the console level or only for the domestic branded business, 36% for this year?
So we've guided to 37% plus for the domestic piece, and the Swiss reference, settled down at 34%, which is a current number.
Okay. Got it, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, if you have a question, you may please click on the raise hand icon on the bottom of your screen and wait for your turn to speak. When prompted, you can accept the prompt on your screen, unmute your audio, introduce the firm you represent, and ask your questions. Ladies and gentlemen, if you wish to ask a question, you may do so by clicking the raise hand icon on the bottom of your screen. The next question comes from Karan Surana. I request you to accept the prompt on your screen, unmute your audio, and ask a question. Mr. Karan, I request you to unmute and speak. So there seems to be no response. The next question comes from the line of Kunal Randeria. I request you to accept the prompt on your screen, unmute your audio, and ask a question, Mr. Kunal.
Hi, good evening. Thank you for the opportunity. Sir, I understand you're not giving that Biocon business growth and all, but would it be kind of fair to assume that the insulin business growth would be slightly lower than the 10% growth that you did in the overall DBF business?
No, it's the other way around.
Oh, okay.
Yeah.
All right. And so, but the market is not growing. I mean, from a volume perspective, the market growth is actually very muted. So just want to understand how you are growing faster.
So, boss, this is all shift which is happening. Please don't look at the volume growth indicated by this is my view. Of course, we might have a different view also. My view is don't look at the data from from either of the agencies. This is more of a shift which is happening from one brand to the other brand. And this shift, we see the whole gain coming from shift, not from the expansion of the market. And any which ways now, just to add upon that point, we feel that the human insulin's reflections is going more into the consumption is going more into hospitals, right? Hospitals, nursing homes. And that is where the data will always be.
I'm very sorry to interrupt you. Your voice is not heard, sir.
So sorry. So I made 2 points, Kunal. One was that the growth which you see for people like us would be from the shift rather from the expansion of the market. Number 2 is the expansion of the market will not be very visible in the data set. This is my view, because more and more human insulin is being shifting to short-term usages also. So institution, hospitals, that has always been a little bit challenge to pick up from a data point of view.
Right. And Amit sir, is this the institutional opportunity that KK's earlier spoke of that you wish to tap in future? And how big would this potentially be?
What is it?
There was a slide on the institutional market.
Yeah. So, Kunal, are you able to hear me?
Yes, I can. I can hear you now. Yeah.
Yeah. So that's a very big opportunity. I will not be able to size it, but I can give you some color on that, we find that the public market itself, look, public health spend is growing, right? And most of the people who have diabetes, the highest spend is happening in cardiology and oncology. So we are talking of the adult population, relatively adult population. And relatively adult population, at least 25 to 30% of them do have diabetes. And these people at at any stress level have to be taken out of OHAs and have to be put on insulins, maybe for a couple of months. I don't know that. So that side of the market is showing a very good traction. So that is why we pointed it out that we see 500 crores as the public market, right? This is our estimate, but relatively logical. And then comes the large institutes, large hospital chains. So these two together represent a very strong opportunity.
Got it. So that's helpful. And just, do you see a risk of, let's say, with the GLP-1s picking up, having any impact on insulin business, or it will be used more as an, adjunct to insulin in future?
Yeah. I think that, that is out already because, US has been selling both of them from the last 10 years. And technically, if you look at it, insulin is very different from GLP. GLP only works when there is insulin in that case. So there's no problem.
Right. And just one more, if I may. So
Please.
sometime back we had shared some FY28 aspirational numbers. Just want to understand of that number, how much have you baked in GLP-1s?
I will not answer. I will not be able to answer. Now, look, what has happened is changing very rapidly. So two things have happened. The good thing is, Kunal, if you remember, I was probably one of the few first people to say that this is a very big opportunity. I said this is like $1 billion first year. And at that point of time, we were kind of, wrapping our head around that. So the good news is that, the size which I was thinking, this will cross that, right? The estimation where I am now rethinking is that I thought that post LOE, right, 80-90% of the market would shift to generics. But now when I look at the market, the way people are responding, I think that the Indian players are looking more like 50-60% of the market. My view today is that 30-40% of the market will be with the MNCs. So if on one level the market size has gone up, it was I called it $1 billion. It seems to be going ahead of that. On the other side, we see now I feel the Indian players have a 60% kind of headroom available. So that's how it is changing. So let's see what happens. But we would be a significant player. That is something which we are working towards.
No, that's a very interesting point, sir. Because but I didn't catch. Why do you think the generics or Indian players will have a lower share?
Okay, so two things. Well, you see, there has been a price correction in semaglutide. And I don't think this is the final. My estimate is this is not the final thing. It might go down. So at the end of the day, the difference will be huge, but relatively it would be less. Number one. Number two, tirzepatide is now has a position of its own, right? So my calculation earlier was that the most of it will be kind of eaten away with generics. Now I feel that it has established itself as as one of the strong anti-obesity drug. So that is where I'm coming.
Now, does that answer the question?
Yeah, it does. It's very interesting. Thank you. And yeah, we'll discuss a bit more offline. Thank you very much.
Yeah, we'll discuss a bit more offline. The opportunity is still big. Relatively, I'm just telling you how I see the market changing.
Thank you. The next question comes from the line of Madhav Marda. I request you to accept the prompt on the screen, unmute your audio and ask your question.
Hi, good evening. My name is Madhav. I am from Fidelity International. Am I audible?
Yes, you are.
So I wanted to understand on similar lines on the GLP-1 opportunity. First question was, what do you think will determine right to win once the generic semaglutide, products start coming in the market, like who do you think has best right to win in India? Is it going to be more distribution and doctor access? Is it going to be supply chain? Or what will determine who kind of, gets more market share versus the other? That was one part. And second thing I want to understand is, do you think this market will be more dominated by the larger players like yourself, who have a good positioning in, let's say, with the specialty doctors? Like, will they have a better right to win, or do you see a lot of smaller players also getting a good toehold in this market?
Look, Madhav, I'll try and answer this, but a lot of things are still up in the air. So, what is the clarity which we have till this point of time, right? So, initially, when we were all talking, right? I'm sorry, I don't want to blabber, but just to make a point, that I was the person who raised my hand saying that this is diabetes. In the long term, this is diabetes first and weight loss next. And today, when you look at prescription, 66% is coming from diabetes, right? So that is one thing, which kinds of makes a point, which means, and the dominance of endocrinologists, diabetologists is quite big. If you look at the prescription share between these two categories, is very high. So that means it will start from the top of the pyramid, right? And Madhav, we have always seen in India's context a drug peaking at 4th to 5th year. Right. It is not like US where it changes overnight once the data comes in, because there is no insurance. Here, people are careful in kind of shifting and then taking them along. So the real peak happens between 3 to 5 years, whether it was dapagliflozin or any other product for that, for that matter. So number one is it will start from top of the pyramid. By the time everybody kinds of gets comfortable with it and uses it, the way it is indicated, it is like 3 to 5 years. Therefore, people who have a better access and a better positioning among the specialists initially should be more benefited. And here the insulin selling experience comes in very handy, because there is a lot of hand holding which is done to the patient. So again, the same thing, which we've been speaking from the last couple of quarters. Nothing major changes. Only it's getting more clear now.
Got it. And so when you mentioned that, if I understood right, you said the market opportunity can be more than $1 billion. That is in like certain number of years, you're saying, right? Basically, or
first year, Madhav.
First year, US dollar 1 billion GLP-1 opportunity in India.
Yeah, I think so.
Okay. So reason I just trying to understand, because once the generics come in, the price point itself should be much lower, right? Like, I mean, it's public news that tirzepatide is selling for, let's say, 16,000-17,000 rupees per month. And they are tracking maybe 1,200 crores odd sale, if my data is right. So I'm just trying to understand the price point. If it's gets cut by a decent percent, so you're saying volumes can really explode, basically.
Yeah. So what I'm doing now, I'm only talking about 1 million stable patient, Madhav. Right now, we think we have 100,000 patients. And whatever data we can get hold of, we are thinking 100,000 patients. And you look at the month-on-month growth. That is what we call, adoption in our markets. Our markets have always been, it will adopt slowly. That is why you see the peak happening in 3rd or 5th year. Right? So right now we have 100,000 patients, and while it is good to say it is 16,000-17,000, but a lot of patients are on a higher dosage also. It should be more than that. Where is it? I don't. It should be more than that. And thirdly, 1 million stable patient is the easy thing, guys. Look at the data which is coming in. Look at the indications which are open. And there's a lot of enthusiasm. So my calculation is more like 1 million patients, and that is where my numbers come to.
So you're saying to arrive at the $1 billion market, you're assuming 1 million as the patients in that. So that's the broad approximation.
1 million patients, right, on the generic piece, and the multinational piece will continue to grow. You can see that happening. Both put together, I see it more like $1 billion. 6,000 crores. We said 6,000 crores. So give and take here.
6,000 crores. Okay. Understood. And so just the second question was on our guidance for FY26. Is there any change to our revenue and EBITDA guidance for FY26? Yeah, thank you.
I don't know the numbers, but we have broadly guided for 50% ahead of the market. Kriti will, of course, tell you the numbers. 50% ahead of the market, and our assumption was 9 to 10% market. The market is more like 8%. So I think that is where it is tracking at this point. If the market catches up and the insulin catches up, we might be a tad good. But as of now, that's the visibility.
Okay, let's connect with Pratik later. Yep, thank you.
Thank you.
Thank you. We have the next question from the line of Neelam Punjabi. I request you to accept the prompt on your screen, introduce the firm you represent, and ask your question.
Yeah, hi. Am I audible?
Yes.
Thanks for the opportunity. So my first question is on the insulin opportunity. So for the RHI cartridge market, what is the market share that we are targeting once the innovator is out?
So Neelam, look, if we just multiply our current market share into the opportunity which is getting available, we basically look at around 200 crores of additional sales. So that is what we are thinking. It's a very technical answer which I'm giving you. I'm just extrapolating our current market share to the available opportunity.
Got it. Okay. And the second question is, you all have mentioned that the lower OCF to EBITDA ratio on account of an increase in GST receivables and statutory liabilities. So could you please provide some more clarity on this?
Yeah, okay. Sachin, would you like to chip in? Yeah. So this GST is basically.
Sachin, sir, I'm sorry to interrupt. Your voice is completely not audible, sir.
Is it okay right now? Hello?
Yes, sir. Please go ahead, sir.
Is it fine now?
Yes, sir. We can hear you now, sir.
Yeah. So these GSTs are basically intercompany transactions that happen because of the change in distribution structure. So because one X company was selling to the Y company within the GST. So it's that.
So I can't hear you at all. Your voice is breaking a lot.
Neelam, can we? You just articulate it now.
Part of the GST is because of what Sachin explained, the intercompany, but a large part of it is also because of the GST related disruptions. So we have seen some GST receivables go up. If you want more details, of course, let's connect offline on this. There's also a statutory liability piece to the OCF, which is contributing to OCF being lower.
All right, I'll connect offline. Thank you.
Thank you. The next question comes from the line of Rahul Agarwal. I request you to accept the prompt on your screen, unmute your audio, introduce the firm you represent, and ask your question.
Thanks for the opportunity. This is Rahul Agarwal from Everflow Capital. On the international business, you mentioned that the EU CDMO order book is going from 100 crores to 700 to 800 crores. Is this the total cumulative number, or is this an annualized number you are targeting over the next few years? And what sort of scale do you see in the international business over the next 3 to 4 years?
Okay, to answer your first question, 700 to 800 crores is the annualized revenue potential from the order book. And as Amit explained earlier, it will ramp up over a period of time, depending on which dossier gets approved at what time. And the second question was, what is the kind of outlook for the international business? So we had outlined, I think, two aspirations. One is 700 crores by FY28 and 1,000 crores by FY30. So we retain those aspirations, and from the current momentum, it looks like we are well on our way.
Got it. And we seem to have made significant investments on GLP-1 manufacturing, uh, and now making more with Levim, which is a different route. Uh, for GLP-1, will we look at manufacturing only for India, or are we also potentially going to use the manufacturing base for international markets?
Right now, we have only permission for India. So we don't have permission from outside. But over a period of time, can it happen? Yes, of course, but not at this point. That's from the GLP-1. And the investment in GLP haven't been hasn't been great. The investment in level, we are looking for the entire pipeline which we showed you in the slide. So, get these products on the line, these investments are needed, and this investment is going in the infrastructure largely. Almost 70% of it is going in infrastructure. So once the infrastructure is built, it serves you for a long period of time. So that's where the idea is.
Got it. Got it. And one last question on the insulin bit. You mentioned that there's been a bit of a delay in the estimates, but you'd expect the numbers to start coming in from November. Did we hear that right? And so the full impact should be visible in Q4 with the innovator
Yeah.
vacating that market?
Yeah. So I can now tell you with a lot more confidence that the market intelligence tells us that vacuum has started building up. So you will see from November, we feel there'll be a little uptick in November, and then December onwards, it will start peaking, and we expect the peak to happen between April to June.
Got it. Got it. Thank you so much for this. Those were the questions. Thank you.
Thank you.
Thank you. Participants who wish to ask questions may do so by clicking the raise hand icon on the bottom of your screen and wait for your turn to speak. As there are no further questions, I would now like to hand the conference over to Mr. V. Krishna Kumar for the closing comments. Over to you, sir.
Thank you all for your participation today. In summary, we delivered a 10% domestic formulations revenue growth in Q2, outperforming the market by over 30%. EBITDA margins stood at 37.5% in Q2 with 11% year-on-year growth. The turnaround in the Biocon segment continues with a Q2 margin of 32% versus 30% in Q1. We are significantly expanding our collaboration with Biocon in India and overseas and adding Aspart to the scope of the partnership. We remain excited about the GLP opportunity and are tracking well on first wave launch readiness and profitable scale-up thereafter. The international business delivered a revenue of 83 crores in Q2 and 152 crores in H1 with a 33% margin. We made significant strides in building our European CDMO business with a 700 to 800 crore order book at the end of Q2. Our international business is on the threshold of an inflection point starting FY27 with good revenue visibility from our first set of European orders. Interest expense was down 17% year-on-year in Q2 with a book tax rate of 22.2%. EPS acceleration has kicked in as guided, with a 39% growth in Q2 and a 40% in H1. On the back of lucrative marketing opportunities in diabetes and injectables, we have front-loaded our CapEx plans and will invest 380 to 400 crores over the next 3 quarters. This will be funded from internal accruals. Net debt stands at 2,278 crores, with the net debt to EBITDA ratio having declined from 4x to 2x in the last 18 months. We expect to get this ratio down to 1.3x by December 26. We remain on track to execute our strategic priorities across all segments of our business. Thank you and wish you all a good evening.
Thank you very much, sir, and thank you, members of the management. Ladies and gentlemen, on behalf of Eris Lifesciences Limited, that concludes this conference. Thank you for joining us, and you may now exit the meeting.